Hi students, welcome to Commerce Solutions. So in this video, we'll cover a theory that is qualitative characteristics of financial statements. So in this video, we'll discuss what are the quality should be maintained while preparing a financial statement. So let's discuss the theory and let's come to our PDF. Qualitative characteristics of financial statements. Okay. Quality means what are the important things we have to take care while preparing financial statement. So what is financial statement? Financial statement means our final output of accounting process like trading and profit loss account, balance sheet, cash flow statement, ratio analysis statement. These are the financial statement. Okay. So what are the quality we should maintain while preparing and presenting financial statement to the interested parties or user of accounting or to the stakeholders of the company or any organization. The qualitative characteristics of financial statement are those attributes which make them useful to the users. The quality make useful to the users. Okay, from where the concept of qualitative characteristics come. As per the framework of the preparation of financial statement, okay, issued by ICI. So, framework of preparation of financial statement issued by ICI. The four qualitative characteristics of financial statements are understandability, relevance, comparability, and reliability. Okay, these four quality we should maintain while preparing financial statement. It is the prescribed quality. These must be mandatory things we have to take take to account while preparing financial statements. So let's discuss one by one what are these quality and understand clearly. First quality is understandability. Okay, understandability. Financial information must be understandable by users. Users must be able to understand the content and significance of financial statement. To understand clearly, the user must devote some time and they must have working knowledge of business activity, also clear idea about accounting terminology. Relevant complex financial matters must find place in financial statement even if it is difficult to understand by the users. Okay. So, what is understandability? Let's summarize it. Understandability means the user of account, the user of accounting information or financial information must be able to understand the financial statement. So, how he will be understand? He must able to understand the content and significance of financial statement. What are the content and what are the significance of financial statement? He must understand, and how he will understand. First of all, he will devote some time. Okay, he will devote some time. Then he must have working knowledge of business activity. Okay, what are the activity of business? In which area the business is performing? Okay, this idea is necessary to understand the financial statement because financial statement is based on the business economic activity. Okay, he also possesses the clear idea about accounting terminology. So, what is accounting terminology? Accounting terminology means those the technical words we are using while preparing accounts, like depreciations, like what amortizations, and these things are very technical in nature. So, a common man cannot understand easily. It needs professional and practice. Okay, it needs professional practice. Okay, as we are belong from commerce background, we can understand easily. But if you ask a general person, he cannot answer your question. What is depreciation? Okay. So these knowledge user should possess before understanding financial statement. Also, another aspect is relevant and complex financial matter must find place in financial statement even if it is difficult to understand by the users. So, those financial matters are complex to understand, but it is important, but it is relevant. We have to recognized in the financial statement even if users are not able to understand. Okay, so important and complex things, it will be find a place in financial statement even if the users of accounts are not able to understand. It is not mandatory all the users have a very much clear idea about accounting terminology. Okay, many users can't understand the balance sheet and financial statement, but we have to recognize all the complex and important financial informations in the balance sheet. Okay, so example here: provision for bad debt, depreciation, amount, amortizations of preliminary expenses. These are the complex calculations, so everybody cannot understand. Amortizations of preliminary expenses, it is a complex transaction. You know, preliminary expenses means before incorporated expenses like license fees, okay, and designing MOA, AOA. These things are happen before commencing a business. So we have to amortize. Amortize means we have to divide in equal installment and claim one installment in one year after the commencement of business. So depreciations also, it is a means how much we have used the machinery in current year. This is called depreciation. Provision for bad debt, it is also estimations process. So these things are complex things we have to record while preparing financial statement even if the users are not able to understand. So understandability is clear. Then come to relevance. Relevance means usefulness. Okay, usefulness. When the provided financial informations are able to meet the decisions making needs of users, then only it can said relevant. They must be able to evaluate past, present, and future events and accordingly take the economic decisions. So relevance means usefulness. It is useful to users or not. When it will be useful? When when the information is able to meet their decision making needs or requirement. Okay, when it will be helpful for decision making? When the informations in arranged in such a way that they can evaluate past and present year financial transaction and predict the future events and accordingly take their economic decisions. This is all about relevance quality. Relevance is a quality we should maintain in our financial information. Okay. Without relevance, users cannot use for their decision making process. Here is an example that is provided dividend declare and paid information in financial statement or financial information. If a company provided the information related to how much dividend declared and paid in different year, the users will compare the financial information, the past year data and present year data, and they can estimate the future dividend, means current year or next year dividend, how much will be our dividend in the next year. So that is relevance. Okay, that is the relevance of financial information. Third point is comparability. Third point is comparability. So what is comparability? Comparison means looking similarities and dissimilarities on financial informations amongst different companies belong to same industries. So comparability means we have to compare our financial data with our competitors' financial data. This is one type of comparisons. Another is users may like to do trend analysis like comparison of past data with present year data of same company. So we can compare our past year financial statement with current year financial statement. Okay, this is comparison. So comparison is basically two types. One comparison is we have to compare our financial informations with our competitor financial information. Another type of comparison is we'll we will look our past performance and compare our past performance with present year performance. Okay, so comparison will be possible if financial informations are made on consistency order. Consistency order means our principle of accounting. Okay, our principles of accounting or method of accounting, these things are consistent in nature. For example, if we are following straight line method for depreciation, we have to consistently follow year by year the straight line method. If we are deviating the method of depreciation, so our financial result, that is profit or loss, will differ. Okay, and uh, this, this will mislead the comparisons. Okay, this will mislead the comparisons. So consistency means whatever we are following the methods of accounting, we have to follow consistently. Okay? That is comparability. This is the important point we have to consider. Otherwise, we cannot compare our financial information. Comparability. Then another thing is reliability. Okay. So what is reliability? Reliability means trust, and trust boosts confidence among users. So reliability means trust, and trust boosts confidence among users. Okay. When financial informations are made based on actual figure, that is free from material errors and personal bias, it will be reliable for users of accounting. So reliability means our financial information must be trustworthy. Okay, the users of accounts can trust our financial information. When they started to trust, the confidence will emerge with them. Okay, when they will be confident, they can take their decisions with our company. they can take the investment decisions with our company. So when they will be trust us, when they will trust us, so if we are maintaining these qualities, okay, then they can trust us, okay. So free from material errors and personal bias will be reliable for user of accounting. If our recording is errorless, okay, if our recording is errorless and free from personal judgment or bias. Personal judgment means we are preparing our financial statement mm, according to the principles. Okay, we are not applying our personal belief, our personal judgment on our financial statements. Then only the trust can generate, and the trust can boost confidence among the user of accounting policy, and accordingly they can take their investment decisions or other related decisions with our organizations. That is called reliability. So the following qualities make information reliable. So if you want to reliable, if you want to generate trust among your user of account, you have to maintain these qualities. Okay. So first quality is faithful presentations. Okay, faithful presentations means the provided informations or figures must be resulting from actual business transactions and event. It should not be wrong and mispresentations. Okay, so whatever information you are putting in your financial statement, this must be accurate based on actual transactions, and there should not be any wrong or misrepresentation in financial statement. For example, there was a scam, Satyam scam. Uh, they mislead their users while wrongly showing their bank balance, their cash balance. They simply wrongly showing. If their cash balance is 10 lakh, they are showing 50 lakhs. So they are misleading the users. So if you are putting this type of information in your financial information, that will not lead to trustworthiness, that will not lead to reliability. Okay, faithful presentations is most important things we have to careful about it. It is faithful presentations. Another thing is substance over form. One thing is substance over form. Substance means substance means based on actual economic reality. Okay, and form means legal forms. Okay, so substance over form means economic reality should consider while recording transaction over legal form of transactions and event. For example, asset on hire purchase, office building ownership not transfer. Office building ownership not transfer. That means if we have purchased a building, we already paid the amount and we are using it now. Okay, for official purpose. But the sale deed, the ownership not transferred yet. So legally, we are not the owner of building, but in fact, we are using that business because we have already paid. We have already paid. This is the economic reality. This is the substances. Based on these substances, we can record the building as an asset in our balance sheet. That is called substance over legal form. We are avoiding here legal aspect, though in current situations we are not the owner of building, but we can show the building as an asset in our financial statement because it is the economic reality. So economic reality means substances. So we can avoid here legal form. Based on this substance over form, we have to maintain our financial statement. Another example is asset on hire purchase. If you are purchasing a asset on installment basis or hire purchase basis, we can simply show this asset on balance sheet on the base of substances over form. Though the ownership of the asset is not yet transferred to us because it will transfer at the last installment. Okay, when we'll pay the last installment, the ownership will transfer. But we have we have been paid already several installments and we are already using that asset. We can show the asset as a on the balance sheet on asset side that is called substances over form. Simply means we can avoid the legal form here. Okay. Another thing is neutrality. Neutrality means based on principles. So financial information must made as per scientific principles. It should not be affected by personal bias. So we are recording transaction as per the golden rule or American rule. These principles are scientific and this is neutral because as per the rules we are recording our financial information. So we cannot record as per our personal belief. Okay, if you are recording as per your personal belief, it will deviate the neutrality and it will not be reliable and your users cannot trust you. Okay, so here is neutrality. Information should be maintained on neutrality basis. Another thing is prudence. So prudence means estimating the amount and time as the case may be with reasonable element or caution. Okay. So what is prudence? Prudence means estimating. Okay. Estimating the amount and times as the case may be with reasonable element and causes. So estimation is not a standard form. Though we have to estimate some transactions, some events, so we have to consider the reasonable element and cost. Okay, management has to make estimate in respect of certain items such as provision of bad debt and doubtful debt or economic life of an asset, etc. Prudential. So prudential means estimations with reasonable element. We have to estimate something like provision provision for bad debt and doubtful debt. How much our debt was bad in our previous year. So, based on a trend analysis, we decide a percentage that that percentage of debt we are claiming on the debit side of profit and loss statement as provision for bad debt and doubtful debt. So this is simply a estimation based on our past experience. Okay. So that estimation must be reasonable. Okay. That estimation must be justifiable. That estimation must be uh, faithful. Okay, and that is called prudence. Another example is economic life of an asset. Okay, a asset. How many years that asset will work? We cannot say that. We have to estimate because some asset will run a long time and a few asset may not run and can be damaged in short run. So we have to estimate, we have to take a average as per our experience and reasonable element and cost. Okay, so that is the example of prudence. So prudence must be accurate. Prudence cannot be accurate, but must be reasonable. Okay, there must be a cause. Also, we have to take the reasonable element. Another thing is completeness. The information contained in financial statement must be complete within the limit of materiality and cost, and omission can cause information to be mislead and false. So we have to provide complete financial information under financial statement. We cannot omit anything. We cannot omit anything because it can mislead the users. Okay, so completeness is very much important. Another thing is timeliness. Accounting information should be provided to the users on time. Okay, if informations cannot provide on time, they cannot take their decisions on time, so that will be lost to both the parties. Okay, that will lost to our organizations also, or our users of the organizations also. That is, before it loses its capacity to influence their decisions. Okay, so timeliness is very much important. Another thing is verifiability. Verifiability. Accounting information should be verifiable. It means that truthfulness of the recorded transaction can be independently checked by any person through source document. Okay, so the transactions must be verifiable on the basis of source document. We have to attach all the source document on which we have recorded our transaction, so that any person, any auditor or internal auditor, external auditor, they can check. Okay, check the truthfulness. This is all about qualitative characteristics of financial statement. Basically, there are 4 points, but the reliability is a big area we have to cover. We have to maintain all these factors while preparing our financial statement. Okay, read carefully and pause the video and take the note from here. If you have any doubt, please ask on comment section, and I hope it will clear all the concept here. Many peculiar words are that you might be heard first time. That is substances over form. So read it carefully. The note is prepared in very simple language. Okay, so don't worry. Just read out and pause the video and make your note. Okay, if this video is helpful to you, please share and subscribe our channel and like it and stay tuned with us. Okay, thank you.